I'd like to welcome you to a brief synopsis of our three-stock lunch on July 16th. We presented companies that we believe belong in many portfolios, and we think you would benefit by at least watching them. We're going to present initially part of my WABC interview, and then we'll have the companies introduce themselves very briefly, and those that you find of interest, put it on your trading screen, watch, and when and if appropriate, become an investor.
You're listening to one of the most iconic stations in the nation, American Original. Talk Radio 77 WABC and WABCRadio.com.
Once again, we check in with respected market analyst Henry Weingarten, who is seeing a market alert.
Today into August, that is to say from mid-July to August 2025, we are now on market yellow alert. It's something we do only once or twice a year. While markets are comfortable that all will be fine, it is important to note there's a high risk of ignoring this yellow alert and not locking into some long profits or hedging your portfolio. This yellow alert is for the next 3 to 6 weeks. While metals and defense stocks are relatively safe, the markets are increasingly at high risk, both for fundamental reasons and also astrological reasons. Our general view is that we should be investing for 2026 November, and most important, to have the ability to buy if and when markets panic, which they may this month, may not, but they may. You have to be prepared for that. Also, unlike the previous years, there are definite winners and losers, and good stock picking and or trading will greatly outperform index funds, which traditionally have done very well over the last few years, but less so today. So let's take a look first with the bonds. As we get to Wednesday and the CPI and the PPI, tariffs are going to show. Whether they show up this month or whether they show up next month, they will begin to show. So two things are happening when we talk about the U.S. bonds. Our view has been that 0 to 3 rate cuts in 2025. The inflation outlook is very mixed. On the one hand, we have a weak global economy, and you'll see increasing discounting and dynamic pricing. And on the other hand, we have tariff crises on and off, especially August. Additionally, there's much more labor weakness in the market for 5 reasons. First, AI, which will be reducing jobs. Second, robotics, which will be reducing jobs. Dodge, which will be reducing jobs. Labor inflation, and a challenged economy. So while there's a 50% chance of Fed action in September and the fair value of bonds, which are roughly in the 435 to 450 range, we have to be very careful here. It is our new forecast that there will be at least 2 Fed drops by the spring of 2026. It may not be in September, although I think there's a good chance of that, and December. But if it's not, it will definitely be by the spring. Gold, which we tend to spend a lot of time on, is extremely high, touching 3,400, but its fair value is only about 2,600. Why is that? Primarily because it's trading like a crisis. And should the crises be reduced, which there's a good chance of, or inflation increase, then gold prices will drop. So to some extent, we are hedging ourselves and selling gold, which we did at 3,500. We started selling silver between 38 and 40, although we recognize it could go to 50. But we're hedging this by buying gold and silver stocks, because gold and silver stocks will outperform the physical. And if we're wrong and gold and silver does continue up, then by buying the gold stocks, you will be in a much better shape. So our general view, if you don't like to hedge, is to slowly accumulate on weakness quality stocks in the gold and silver space. Let me give an example of 3 stocks that we like this month that we're looking at, and we think you should at least watch for your portfolio. The first is Vizsla Silver, which has replaced Mag Silver, which was just recently bought out, as our favorite #1 silver pick. And why is that? Well, they check all the boxes. Experience, quality management, very rich asset economics. It's well-funded, $200 million, no debt. The location has infrastructure and mining friendly, and exploration upside. Everything you want. And the kicker is, when they go into production in 2 years, the IRR is currently well over 100%. Another company we've been looking at is American Tungsten, because it's potentially a very critical metal defense play. Obviously, as we get into the next year, a lot of money is going to be put into defense. And if we look at it, the critical metals, and tungsten is the number one metal that people are looking at. This is a situation, it's fast-producing mines, and it checks all the boxes for a high-risk exploration play that we like to look at. And our third is a company that we've looked at before, which is Acme United. It's a U.S. manufacturer and global manufacturer that's taking benefits from the onshoring. It's extremely well positioned financially, so it will do well when, unfortunately, a lot of companies will be going in deep trouble and distress. They can take advantage of it, as they have in the past. The consumer defensive sector is a very safe haven, and we're concerned that we're going into a global slowdown, especially next year. I was speaking to someone today from Germany who's being laid off in the automotive area, and I said, well, isn't this due to the high energy costs and the war and due to the U.S. tariffs? And the answer is no, it was due to China. And we're going to see a lot of layoff and a lot of restructuring coming over the next year. Additionally, Acme has the benefit of being a healthcare sector. So there's a lot of companies you can take a look at. We're not suggesting rushing and buying at the moment. We're suggesting watching them. We're suggesting, should markets drop in August, then we think it's a good time to start accumulating, if it's a company that you want to have in November 2026. If it's not, as a day trade or a longer trade, then of course you can no longer short the market any day.
Thank you, Henry. Henry Weingarten, a highly respected market analyst based here in New York City.
The number one talk station in the nation, 77 WABC News Store. From Wall Street to Washington to your wallet, you're listening to The Larry Kudlow Show.
We're now going to play 3 brief introductions to these companies and then a little conclusion.
Hello, my name is Michael Connert. I am the founder and CEO of Vizsla Silver Corp. We're traded under the ticker VZLA on both the TSX and the NYSE. I want to say thank you to Henry, and I'm glad to virtually be here at the conference. And I want to talk about why invest in Vizsla Silver today. So very simply, Vizsla Silver has a very large vision of becoming the next world-class silver producer. The way that we're going to do this is by unlocking the value at our project here, the Panuco project. The Panuco project is one that we've consolidated for the very first time in modern history. This is a very high-grade, very large silver district in Sinaloa, Mexico. And what's really interesting about Vizsla is that we share a lot of characteristics of the other 3 single asset silver producers that were recently acquired in Mexico. You may be familiar with Gatos Silver, Silvercrest, and Mag Silver. In some ways, we're very similar. You know, this is a precious metals district in Mexico, as were the other 3. We're high grade. We're a large 100% owned district. We have incredible exploration upside. But where we're a little bit different from these other 3 that recently traded hands at an average of 1.8 times their net asset value is that because we're a little bit earlier in the development stage, we trade at a discount to our net asset value. Now, the company is very well funded. We have over $200 million US in the bank. And towards the end of this year and going into 2026, we're going to accomplish a number of things that will increase our net asset value multiple and bring us much closer to valuations we saw for Gatos, Silvercrest, and Mag. Now, in fact, we are similar in a lot of ways, but I believe there's characteristics about Vizsla Silver that should have us trading at a premium over these other peers. You know, we are 100% owned. We have incredible exploration upside, and we're purely precious metals, silver and gold here. As a result, I believe as we continue to do the things that we're working towards this year, which is the feasibility study, permits are on the horizon for us, We have a test mine, and we also have financing coming in the form of project finance. As we check all of those boxes, I believe our multiple will re-rate, and I believe Vizsla Silver share price will be much higher than it is today. So in summary, the reason to invest in Vizsla Silver is that we're the last man standing in terms of high quality, very large silver primary producers in Mexico, and that we have a number of accretive catalysts coming up here that are going to create a lot of value for our shareholders. And thank you very much for listening.
Please note the outperformance of the stock, and depending on what years you use, you will see that it will outperform silver in almost all cases. What is that? Finally.
Tungsten is currently trending #1 on the Investor News website. Can you tell us if you see that slowing down or only picking up the pace?
Well, if you look at tungsten, the price is at 14-year highs. It's up about $100 in February, 352 in February, 452 today. That price has been increasing well before the trade wars came into place between the Trump administration and China. China announced their intent to restrict all exports well before Trump was inaugurated. So despite what we see may happen with these trade wars and the July 9th announcements that are expected, I think tungsten will continue to be in very tight supply. With NATO having committed to 5% of their GDP going to military and bolstering their military, you cannot have military dominance without tungsten. And the state of the world today, unfortunately, with all the conflicts that are occurring around the world, it is imperative that we start to bring tungsten supply online domestically, and we are able to maintain that military dominance and industrial dominance as we start to build on microchips and nuclear power plants, wind and solar, and all of these other things that we deem, or have imported, I should say, for the vast majority of the last 20 years.
And now we have
Hello, I'm Walter Johnson, Chairman and CEO of Acme United Corporation. We're listed on the New York Stock Exchange, symbol ACU. We're one of the largest suppliers of first aid kits in North America, as well as one of the leading suppliers of cutting tools globally. Our Westcott scissors are the largest in the world. We have a history of driving growth through innovation. Our customer base is a who's who of premier companies, whether those are industrial distributors, retailers, and large OEM accounts. We've got 14 years of consecutive sales growth from ongoing operations. And we have a large recurring revenue component due to refills in our first aid kits. Our EBITDA is about $20 million. Our sales are over $200 million. We've had a history of successful acquisitions. We continue to be looking at them, and we think this is an excellent time, both because we're highly liquid and because there's been substantial pressure from tariffs and the economy on some of our competitors. We believe we're positioned for excellent potential growth in the future, and we're excited to share our story with you. Thank you very much for listening.
And you'll notice here also the outperformance of Acme to the S&Ps. Tungsten, because it's a special situation, I'm not showing their chart. We do have a potential 10-bagger there, but those charts tend to be very volatile. So our approach is, if we're not talking about trading now, if you're investing, invest for November 2026, because that's what everything behind the scenes is being done. We also suggest caution over the next month. So, coming ahead, we have August 19th, our quarterly update. On 23rd, we have a new series, Fixed Stars for star companies. And, of course, if you subscribe to our YouTube account, Henry Weingarten, you'll get to see what we're doing, because we'll be doing a lot more online than we've done previously. So thank you all for attending, and all the best. Again, we recommend being cautious here. So.